Okay, guys, today this is my morning brief for tomorrow morning. Doing it tonight, ahead before the market's even open, just to give you try not to get messed up with the open there in Europe. I didn't want to be deceived by the opening value. To give you a better idea of what I'm seeing in the markets. So what I want to point out is the close print that we had today on SPY. It was the last of the big boy indices to break the quarter lows. So the October lows. So we closed below the October lows. That's the first closing print below the October lows. Why is that so significant? Well, if you're a fund manager, okay, and you're taking money off people off the street and you're managing their funds, the close today effectively has shut down many of these fund managers their books. Okay, they're, they will, because we closed below that last prior quarter's pivot. They effectively are going. Traditionally, they would start moving funds over into bonds, but we have a bond bubble going on right now. Okay, but yeah, historically that is the cutoff point, and they start thinking maybe not necessarily they have to advise their clients, but then they start advising their clients to start liquidating their positions. Okay, we closed at that level today. Okay, now I'm not saying that's going to be the case, but I'm just saying. Okay, uh, so what's going on? Because we have a property bubble, housing bubble, we have an equity bubble, and we have a bond bubble all at the same time, which we've never had ever in history. Okay, this is a very dangerous situation. So, because what typically you would see is the fund managers just pull their money out of the equities, and the money would rotate over into the bond market, and then they'd ride out the storm. Well, now the bond markets are so overly inflated, they really can't do that. So the only place that they can actually take these funds now is to cash, or another. I'll come back to SPY in a minute. Another thing that they could do, gold. Okay, guys, gold has been on a tear here lately. I personally think that we may be on the bull market of all bull markets for the gold, if this thing continues to go the way I think it's going to go in the markets. We are going to look back and we're going to see, you know, I am not understating it. We might be seeing 3,500 on the GCs, maybe a double on these golds from this point going forward here. You see, we've been digesting for a long time. You know, we might be setting up to start a major bubble in the gold market. Okay, as people, because of the inflation scenario, typically but people buy gold during inflationary times, and if you don't have anywhere to put your cash for safety in the bond market, one of the few places that they can take it is either shorting the markets or parking it in gold. And this is a scenario that I do want to float out there to anybody who's listening to my videos. And I want to for you guys to be advised of that scenario. I can't remember which one I had loaded here. 1 second here. I think my quarter pivots is what I had loaded. Nope, that wasn't it. Let me see here. Quarter pivots. Yeah, there we go. Okay, guys, so we got quarterly pivots right here. Okay, and so we do have a quarterly pivot here at the 217, about the 218 area, 217, 218 area. We're right above a prior quarterly pivot. Uh, if I zoom in here on a 15-minute, what we did today, and I think it's really important to note this. Okay, if you draw Fibonacci retracement from the October low all the way down to your quarter pivot, okay, let me go here and zoom in here, guys. Okay, so during the cash session, for the most part, we held right here at the 50%. They were trying their best to hold that right here at the 50%. Okay, and there at the very end, they finally gave up on it. Okay, this is also the July and January of this year. That'd be our low of the year. So we've actually put in a new yearly low here in the after hour session right here, right now, live. Okay, guys. So the reason I'm bringing this up, what they like to do, if you guys the algorithmic trading, what they like to do is break critical support areas, bring it down to a 50% fib, okay, and then rip it into your face. That's what's been going on for years, okay? That has been the scenario. And I don't know what's going to happen tomorrow. That may do that. They may not do that. But my point is, us breaking that October low, that is a major deal. A closing price below that. This is a little bit different than what we're accustomed to. Okay, so do not be surprised if the overnight session you do not see that pop that we got this morning. We were getting an initial European pop, but because where we closed, they're all coming in realizing that above the October low was still buy the dip. Anything above that October low, you could still, it was a valid buy the dip scenario, and that's what we came into this morning. We are above that October low. Well, now all of a sudden the game has changed in my humble opinion. Okay, guys. So I do want to float that idea going forward here. Some things that you know, I think we've crossed a major inflection point in the markets. We have not seen volatility get out of hand yet, but because of us closing down here, if things get heated up now, volatility can just skyrocket. If you use your VXX here, we closed right at day highs. We're even putting in higher highs here. If you go out here on a weekly time frame, possibly, right here, it doesn't even look like we've even moved yet. I am floating the idea that this thing could get really out of control here, really quick. So be aware. Uh, given the nature of what we just did, up here is not out of the cards. The 44 here on the VIX to end our week, we could be at the 44 level here on the VIX. So be aware. I am forewarning you guys, everybody in the room, that this is a very dangerous situation that we just closed in the markets. The Qs, they were leading the way down, okay, led by Amazon. Amazon was breaking down. We still got $100 to fill the gap to the downside. Very risky scenario that they're going to get Amazon down in the overnight session. So be aware of this. So we're coming right into the June lows already. So basically, we've already given up. Uh, my main point, if we're coming into the June lows already, we've already given up 2 quarters worth of value on these Qs. Okay, so 2 quarters are gone. That's two quarters of investor value into the markets that just got wiped out. Okay, so I do want to point that out. Now, also, if you go here on the NDX, I got to type in the NDX. Wait a minute, NDX. Okay, and there you go. So basically, we're coming right into that 20%. I had mentioned that on my weekend video. A scenario that I was looking for is to be crossing this 20% at some point in time this week, and then the media getting all on fire about it. Basically, the 20% is your line in the sand bull bear market call out. So they're going to be coming on there talking about tech is in a bear market, possibly as we cross that 20% this week. Now, don't get me wrong, we do have some supporting candles down here. I mean, we may not completely fall out of grace real quick but bear markets can be extremely violent, guys, extremely violent. And so, like, I'm thinking this is your left shoulder, your head, and we've broken down inside. As of today, we're breaking down away from this head now. See that candle right there is still supported. That wick still supported the head, but we officially broke into the shoulder range here on the Nasdaq today. So, and the candle's really not that big, so you would say, "Oh, that's not that bad, right?" Yeah, guess what? I mean, I know it doesn't seem bad right yet for just today, but this thing can really get ignited. So be aware of that scenario going forward in your trading. And then I also wanted to watch your IWM. So I had been talking about IWM. This was my main tell that I did not think the market correction was even close to being over yet. We got the 180 area as your next quarter pivot. We were right here in the middle of limbo. Been that way for a while now. If you go back on your daily here, you can see what's going on with the daily candles now on your the bear flag breakdown. I signaled this earlier this week. We got the bear flag breakdown. We're coming right into the bottom of this range, probably really close. Probably going to gap down into it tomorrow, to be honest. We're going to be coming down in the body lows at the very least, if not even worse. So, like I said, 182 is your next quarter pivot down here. Really looking like very good odds we're going to be hitting my target this before the week closes out here, if not worse. So just heads up on that. Remember, we got another other quarter pivots really not too far away from here either. It's this here was the really fast move area, potentially to the downside. So be aware of that. So that's why heightened volatility could just explode because we have all this this room, possible potential room to be breaking down in this week's session. Okay. And I don't want my video to be too long, so I'm just going to go with the Russell. And we are beyond a 20% correction, so we are technically in bear market territory from a technician standpoint. So that's another thing to keep in mind. So we are going in the overnight session with we already proven a closing print in bear market territory on the Russell. We're sniffing on bear market territory in the Nasdaq, and the S&P's broke the quarter support, fourth quarter support from last year for the closing print here. So just keep this in the back of your mind whenever you're thinking about the markets and your trading. Okay. And then the final thing I want to talk about, that's your diamonds. Similar situation as the S&Ps. We broke the fourth quarter support. Okay, so we did have a clean breakaway of fourth quarter support in the diamonds today. So keep that in mind going forward in your trading. So now we have to look at the July. So basically, yeah. Well, no, actually, guys, we got half a year break. This is 2 quarters of inventory that just got wiped away. 2 quarters, because June. See, where is that? July. Yeah, this was back in June right here. Okay, guys. So right here. So this was still in June down here. Okay. So this right here is yeah, this is all the way back in June. So we've actually wiped out half a year of inventory. And to finish off what I got to say here in the markets. So basically, by the time we got to this point in this correction in this market, most anybody, well, basically, who's invested in the past 6 months of last year, they are underwater at this point, you know, and you only get a $3,000 a year tax deduction for losses. And so what we are seeing here is we are approaching critical mass for people who start closing out their cash investment accounts in stocks across the country because they're already approaching or already have already maxed out their $3,000 tax deduction. So that's another thing that's another pressure as we go down here. That's why whenever you typically see market corrections, they start out real slow and then all of a sudden the bottom falls out. I am warning everybody, we're right here on the cusp of the bottom falling out. Okay? So there you go. That's all I got to say. Oh, please like my video and please retweet it on Twitter. My handle's Gumby9662C. I need to get as many views as I possibly can on these YouTube videos because they take way too long to upload. And I'm getting less than 100 people. I need to get that up to around 400. Okay, guys. So heads up on that. I really appreciate if you guys could get these videos floating out there. Help me get them out there. And comments, please put comments at the bottom, positive. And even if you're seeing something that I'm not quite seeing at a different angle and stuff. And as far as this whole Ukraine thing goes, I mean, one final little takeaway. All Putin did was move his equipment up into more optimal position for another move forward. It's a chess move, okay, guys. There is nothing about this that has changed. In fact, it's resembling more and more like pre-World War II, the Nazis moving into Poland than anything else. Okay, so I'm just saying, you know, everything is going on over there. If anybody thinks he's not going to invade Ukraine, I think you've been drinking the wrong type of Kool-Aid. So that's as far as what I'm saying. At any rate, and honestly, I honestly think he intends on all those countries that left Russia. He intends on taking them all back. Now, I don't think that's all going to happen. I actually think we're probably going to have more troubles out of Taiwan before that happens. And that's a whole nother story, which I don't want to get on and get people pissed off. So I'll just leave it at that. Okay. Thanks a lot for listening to my videos.